Good morning. As those few who are watching these videos at this point will understand, I'm just getting started. The eventual objective is to have a stock every trading day that is at a buy point. That takes a monthly review on my part, which hasn't been happening with the regularity in the last year that it should have. That's all changing this year, but in the meantime I'm making a video every morning, and there simply aren't enough stocks in my list which are at a buy point to facilitate presenting a stock at a buy point every morning. So I am going to resort to looking at what other people are saying you should buy. Not wanting to be comic, the first source of inspiration I have referred to is The Motley Fool. The Greater Fool indeed. This is an article from The Motley Fool from Tristan Harrison, suggesting that if there's one stock that you want to own this year, it is Washington H. Soul Pattison. So let's look at that. Here is the stock's fundamentals. You'll see that while I grew up thinking of Washington H. Soul Pattison as a company that operated chemists, it has since evolved into an investment house, and the rationale of Mr. Harrison in recommending that Soul Pattison is the one stock that you would want to hold in 2025 is largely based on this diversification into general investing. The company has a strategy of widely disparate and opportunistic investing. So what you have is a bunch of guys trying to make money, trying to return on the shareholders' investment in that company. It is at about number 40 on the ASX with a market cap of about 13 billion. PE ratio at 27 isn't great. Debt to equity is fantastic. Price to book isn't ideal, and they pay a very, very consistent but rather small dividend. Here are the financials. What you'll see is that 2020 was the big year for Soul Pattison. So what was the rationale there? One can only surmise that it was uncertainty. In the very uncertain times of COVID, investors flocked to Soul Pattison, perhaps because of the security of investing in a company that's been around for a century. Not a bad rationale. Things have tapered off since then, but compared to the pre-COVID performance, the post-COVID performance in 2024 was not at all that bad. Return on equity has gone down, but of course the point here is that during this period the amount of equity would have significantly increased. Here are the dividends. As I said, not really anything to write home about. A consistent small dividend averaging around 3%. Better than a poke in the eye with a burnt stick, as they say. So the problem here is, for me at least, is that the methodology which I am recommending is based on the primary use of the MACD as a buy point indicator. If we look at the company's charts, here is the very long-term chart as far as TradingView can accommodate. Here is the very short-term chart that I prepared earlier. If we have a look at the MACD, you'll see that on the basis of a crossover point below the zero line, the buy point came 4 trading days ago. So what I am trying to do with the channel is to pick a buy point which is at this point, the day before an inevitable crossing of the MACD line by the signal line in an upward direction. That's not the case here, and I hope you'll, if you're watching, give me some latitude. The reality of the MACD line is that while it is probably the single most reliable indicator, as I will say in probably every video, technical analysis, the first rule of is that you don't act on the basis of one indicator. So while MACD is helpful, it can't be the only basis upon which you make a buy. So the rolling question, as far as this series is going to be concerned, is what are the other indicators that will support reliance on the MACD as a buy indicator. What you see in this chart is a green line, which is the growth trend line of the company since records started in 1991. The company's actually been in operation, as I said, for more than a century. And what you see here in black is the 200-day simple moving average. Many people will tell you that the 200-day simple moving average is another very basic indicator upon which you can rely, the objective being to hold the stock while the price action line is above the 200-day simple moving average line. You can see that that's the situation now, but at the time of the buy point it was below. If we look back, we can see that the 200-day moving average line has very much started going sideways since about June last year. What's happened with Soul Pattison, this being its all-time high, up around $40, is that it has retraced, and then it has spent the last few months bumping its head against a line of resistance at about $35. What does that mean in the long term? Well, if we go back to the long-term chart, you will see that the company has a very, very, very long and sustained, consistent pattern of growth. The growth has not always matched the trend line, and you can see that the current trend line cuts across two recent periods of spikes of growth, but at the moment is in the middle of this trading pattern between about $32.50 and about $35. So the question is this stock going to break out and break through that $35 line of resistance? It's a question for you, but on the basis of its long-term history, and Lord forgive me, on the basis of the recommendation of the Motley Fool, it's something that I suggest you look at. When you buy exactly in this setup is open, but may want to buy.